Okay. So what is transfer pricing? Now, when it comes to transfer pricing itself is a process, okay? It's a process, but a transfer price is what we derive in that process. So the pricing of cross-border intra-firm transactions between related parties is what we call transfer pricing, okay? The process of setting prices, okay, involve usually for the transfer of property, income, services between associated enterprises, which form part of a multinational entity group is what we call transfer pricing. So when we talk about persons in controlled relationship, the price that we set when we are dealing between them is what we call a transfer price. Now, that kind of transactions are normally called controlled transactions, which are usually distinct from what we call uncontrolled transactions. Controlled transactions are transactions between persons in controlled relationship. And uncontrolled transactions are transactions between unrelated parties in the market. So assuming you are in the market and I'm buying something from you, you don't know me, I don't know you. The price which you are going to sell to me is different from when I know you. The price I'm going to buy the thing from you or you are going to sell to me. That is a controlled transaction because we are related in some way. And the price between persons who don't know themselves or persons operating independently is what we call the arm's length price. And the arm's length price is the focus of our transfer pricing rules, that every transaction should be at arm's length, irrespective of whether it is between independent parties or between controlled persons. It should always be at arm's length. But here lies the case. Persons in controlled relationship do not normally price at arm's length. Why? That is the objectives of transfer pricing. Transfer pricing in itself is not necessarily abusive or it doesn't involve tax avoidance. But if you do it in such a way to minimize tax liability, escape custom controls, okay, escape tariffs, reduce other form of duties or regulatory levies and other things, then you are being abusive. You are trying to use it to benefit yourself or benefit a group, okay? Sometimes there are limitations from other countries when you try to maybe repatriate dividends. Some people use transfer pricing to manipulate and transfer things to them as royalties. Meanwhile, it's the same dividends that they've disguised. All these things are transfer pricing abuse or transfer pricing manipulations. That is tax avoidance. And you remember that in every tax law, there are provisions that stop this type of tax avoidance. So I told you that transfer pricing is the setting of prices for what cross-border transactions, usually between what associated enterprises for the transfer of property, goods, and services. And also an income. When you transfer income as well, it could be transfer pricing. So who are these associated enterprises I'm talking about? Associated enterprises, who are they? Now, associated enterprises may begin from multinational enterprises who are made up of separate taxable entities that are connected by share ownership. So you have entity A, entity B, entity C, who are all connected by share ownership. We all know group entities. One owns 50% of the other, one owns 20%, an associate. So all these joint ventures, they are all connected by share ownership. They are all multinational enterprises. Now, associated enterprises from Article 9 of the OECD or the Model Tax Conventions, UN OECD model, says that this is an entity which has direct or indirect participation in either the management, the control, or capital of an enterprise. Okay, so anytime you see associated person or associated entity, it means an entity which has direct or indirect participation in the management, the control, or the capital of an enterprise. Now, if you've done accounting before, we have an accounting standard that deals with associated enterprise, which we call related party transactions or related party disclosures under IAS 24. So this standard deals with related persons, and the transfer pricing regulations also apply the standard. So you see a related party may be somebody who has common control, who has control or who has significant influence in an entity, the same way that person participates directly or indirectly in the management, the control, or the capital of a particular enterprise. So if you own shares, you're a key management personnel, close family member, all these people are deemed as associated persons. Okay, so that is what we mean. Now, enterprises are usually associated where one person controls the other, or both entities are controlled by the same person or the same persons. Please, are we okay? That is what we mean. So if anybody has a question, just post it in the chat column. So I want to give a simple scenario. A simple scenario may be, let's say if we have entity A here with who acquires entity B. Now you realize one thing, that if entity A owns 60% of this entity, he becomes the parent of this company. Okay, B. Now both of them are what? Persons in controlled relationship or associated enterprises, because this guy has direct participation in the control and capital of the enterprise. Now, if entity B also acquires entity C, let's say 70% of entity C, then A, being the parent, also has indirect participation in the control and capital of the enterprise. Now, if there's a key management personnel of, let's say, some entity here, let's just say entity C, who also comes to this company to work, okay, then you could say that there's a direct participation of management in entity A from entity C. So two entities may also have the same parent. Let's say A has another subsidiary D and also another subsidiary B, as we can see from here. Both of them are under common control. I get it. So it says that one enterprise controls the other, like A and B, or A and C, B and C, or both are controlled by the same person or person. So A controlling D and B. If nobody has a question, can somebody answer this one? Assuming we have an entity somewhere here, which we call entity E, and entity E has a management personnel participating in entity A directly, would that be an associated enterprise? Yes or no? You post it in the chat column. If yes, why? If no, to why? That is all I want to see before we proceed. I'm still waiting. Okay. If not, then we can proceed. So those are what we call associated enterprises. Now we go to the Income Tax Act. Now under the Income Tax Act, under Section 128, it tells us that associated enterprises or associated persons, or our Income Tax Act calls them persons in controlled relationship. Okay, I say yes, because they can take decisions in A. Yes, that is it. Now, for the purposes of the Income Tax Act, two or more persons are in a controlled relationship, where the relationship between the person is one, that of an individual and a relative of that individual. Two, that of partners in the same partnership. So if there are two individuals, an individual and his relative, his wife, spouse, husband, grandfather, grandmother, children, first cousin, niece, nephew, all those people are relatives. Now, they are only not in controlled relationship when the individual and the relative, transactions between them can never be controlled, or the relative can sell to you directly as that of independent person, then it's not controlled. But however, normally we deem relationships between individuals and their relatives as controlled relationship. Now, that of partners in the same partnership are also deemed to be in a controlled relationship. When you have an entity and a person who controls more than 50% of the voting rights of the entity, either together with others or alone, or associated with each other, whether directly or through some or through one or more interposed entities, like the example we saw, A acquiring B, that is directly, or A acquiring B, B acquiring C, meaning A has indirect control in the other entity, they also becomes persons in controlled relationship. That's per our law. Also, that of a settler, trustee, and a beneficiary in a trust. Okay, these ones are all known as persons in controlled relationship. Then, well, another person is not an employee, but acts in accordance with some directions, requests, suggestions, or wishes of another person, whether or not the persons are in a business relationship, and whether or not those directions, suggestions, or wishes are communicated to that other person, that is also a controlled relationship. So we are saying that where one person gives request or somebody and the person carries it out, even when you are not an employee, but you carry out instructions, suggestions, or directions on behalf of another person, then you are in a controlled relationship. Okay, whether or not you're in a business relationship. Now, this looks like an agency relationship. Now, an agency relationship per our law deems people as controlled relationships, being in a controlled relationship, or be controlled parties or associated persons. Okay, so most of the exam is just trying to let you identify controlled transactions. So in simple terms, what are controlled and uncontrolled transactions? Controlled transactions are transactions between persons in controlled relationship, and uncontrolled transactions are transactions between unrelated parties. So the first thing you have to ask yourself when looking at a potential transfer pricing issue is, are there any controlled transactions? So the first thing you have to always ask yourself when you are looking at transfer pricing issues is that, are there any controlled transactions? That is what you are looking at. So because transfer pricing refers to the terms and conditions which these so-called associated enterprises agree for their controlled transactions, transfer pricing rules do not apply to what? Uncontrolled what? Transactions. Yes, because that one, they use the open market values. It is therefore very important to understand the differences between controlled and uncontrolled what? Transactions. Now, controlled transactions versus uncontrolled transactions. Remember, the aim of transfer pricing rules is to prevent multinational enterprises from shifting profits between entities and, as a result, not paying the correct amount of taxes. Such a practice is only possible when there's a level of control that can be exercised across different entities. This level of control can only exist when enterprises are what? Associated. Okay. Now, a controlled transaction is a transaction between two or more enterprises that are associated enterprises with respect to each other. So already, if you know enterprises who are associated, then any transaction between the two of them becomes an associated enterprise transaction or a controlled transaction. So we are going to take solid questions, past questions, to identify whether we have controlled transactions or not. But common examples of controlled transactions from our transfer pricing regulations include supply of goods, provision of management services, provision of support services, granting of license, provision of guarantees, financing, transfer of business assets. Now look at something. All these transactions we are seeing here, independent parties can also offer them. But the only thing that will make it controlled is where it is between two or more what? Associated enterprises. That is when these transactions become controlled. Now we are going to take some questions to identify the controlled and uncontrolled transactions. Also, a transaction between a PE and its head office are also controlled transactions. So let's take some questions. So we are going to go through this question and see whether we can identify the controlled and uncontrolled transaction here. So what's the requirement? List the controlled and uncontrolled transactions between Medic Diagnostic Limited and Medical Engineering Parts Limited, and state their relevance in determining the arm's length price of products and services between the two companies. Okay, so we have this question. It's a question. It has a lot of things under it, but I'm breaking it step by step. From here, we move to another thing. Okay, so it says Medic Diagnostic Limited It's a Japanese company that designs and manufactures medical diagnostic equipment. Now, I want to tell you one thing. If you are dealing with any transfer pricing question, first, always, even when we're doing DTs, I told you, always identify the function of the entity. What does the entity do? Here it tells us that one, it designs, two, it manufactures medical diagnostic equipment. The next thing to do is to identify any sort of control relationship. That is between when he buys from a subsidiary and associate persons that he has control or direct management participation or involvement in their capital. Okay, you have to look at all that. So it says that the company has highly skilled scientists and engineers as employees and also independent consultants. The network of the company's independent consultants is all over the world. The independent consultants are rapidly assembled when they are needed to work on a project. They are paid off immediately the project is executed. Okay. Now, since 2011, Medic Diagnostic Limited has been seeding the production of certain parts of their medical diagnostic to Medical Engineering Parts Limited, a Ghanaian company. Okay. Now, comparatively, it is cheaper to produce those parts from medical engineering parts than manufacturing them by Medic Diagnostic Limited. Now, you see, it told us that it has been buying equipment and sending the parts to medical diagnostic equipment. A Medical Engineering Parts Limited, not so, a company. And it says that it is cheaper to procure those parts from medical engineering parts than manufacturing them by Medic Diagnostic Limited itself or elsewhere. Now, it tells us that Medical Engineering Parts also designs, manufactures, and distributes medical diagnostic equipment. Okay, so the transaction between Medical Diagnostic Limited here and Medical Engineering Parts here, now they didn't say they are a group or anything. That tells us that it is an uncontrolled transaction, or the transaction between them is not controlled in any way. Okay, that is what it tells us. Are we okay? So it tells us that in January 2012, Medic Diagnostic opened a sales and distribution office in Johannesburg, South Africa, and this office promotes and distributes Medical Diagnostic Limited's products in Africa and the Middle East. On January 2013, Medic Diagnostic acquired all the shares of Medical Engineering Parts Limited. You see now there has become a controlled relationship. Now, any transaction before 1st January 2013 becomes what? Uncontrolled. But any transaction after 1st January 2013 becomes controlled because now there's been what? Direct participation in the control and capital of Medical Engineering Parts Limited. That tells you now there's what? Controlled relationship, or there's what? They become associated enterprise. So it says that the acquisition did not affect the business dealings of the two companies. Okay, so if it did not affect the business dealings of the two companies, that means that any transaction that is going on between them still goes on between them. And Medical Engineering Parts continues to supply its parent company with the parts. Okay, so it still buys the parts for Medical Engineering Limited for its production. Okay, and it says that from January 2015, Medical Engineering Parts commenced full production of medical diagnostic equipment for Medics Diagnostic Limited. So it has given us various transactions. So my question is, can you identify the direct or the controlled and uncontrolled transactions from the scenario, from what we said? I'm waiting. If you can post some of them in the chat column. I explained that any transaction between them before 1st January 2013 was uncontrolled in nature. And any transaction after 1st January 2013 was controlled in nature. Yes? So who can tell me some of the transactions that are controlled and those that are not controlled? And those that are not controlled. Yes? The ones that are controlled and the ones that are not controlled. Okay. So first of all, you seeding parts from medical engineering will be the first uncontrolled transaction. Also, if in any case you see part from elsewhere, apart from medical diagnostic equipment, it is also what? Uncontrolled transaction. The sale of products of medical diagnostic equipment in Africa and the Middle East is also uncontrolled because it wasn't controlled. But then if it transfers the products to its office in South Africa, then the office becomes a PE. And I told you that any transaction between a PE and its head office are controlled in nature. So when it sends those medical equipments to its office in Johannesburg, that is a controlled transaction. But where the office sells to people in Africa and the Middle East is uncontrolled. Okay, so that is it. And also, after acquiring all the shares of medical engineering parts, any transaction that happens between them, that is the sale of the parts to medical diagnostic equipment and the full production of the medical diagnostic equipment by medical engineering are all controlled transactions. So if you are able to say this, then you can get the controlled and the uncontrolled transactions on your fingertips. And most questions will require you to do this. It's 8 marks. So you see, so the most important control transaction between Medic Diagnostic Limited and medical engineering parts that should be analyzed in the transfer pricing analysis of the group is the provision of medical or engineering services by medical engineering parts to Medic Diagnostic Limited. Okay, but that is not all. That is what CIT came out with. I suggested some of them. So in an exam scenario, I prefer a tabular approach instead of the listing. So you can put here, if here is your table, okay, you can put here controlled transactions, and here uncontrolled transactions. Okay, then you can start by putting them where they are supposed to be. Okay, so maybe we can say purchase of parts from medic engineering after January 2013. Okay, transfer of diagnostic equipment, to branch or to office in SA. Okay, these are the control transactions that we saw there. Okay, then full production of medical equipment by medic engineering after the acquisition. Yes, that is it. Now, the uncontrolled ones are those between them. So any of these transactions before the January 2013 will become uncontrolled. Now, when it sale of medical equipment to clients, to other third-party clients, it is uncontrolled in nature. Now, the sale of the parts by the office to the Middle East and Africa, they are all uncontrolled transactions. Now, when they buy parts from third parties, they are all uncontrolled transactions. So you could suggest a lot of them. You could always suggest a lot of them, and that would be the controlled and uncontrolled relationships in most situations. So that the controlled relationship will deem the transactions as controlled transactions. Okay, so these are some of them. Now look at this illustration to illustration 2. It says that Spart Company Limited. Here we are going to identify controlled and uncontrolled relationships. So Spart Company Limited is a Ghanaian company that designs, manufactures and distributes smartphones. To be abreast with technology and be competitive in a global market, the company releases a new model of smartphones every year and buys back the previous year's model from its accredited distributors as a matter of policy. Now, Spart Company has sold its products in Europe through an independent distributor, Holles SA, a company resident in Netherlands since 2010. Now, Holles SA has distribution channels in all European Union countries. Now, Spart Company Limited will buy back any unsold stock of the last year's model smartphone from Holles SA at the start of each year. Holles SA will then start the purchase and distribution of the current year model of smartphone. Okay, so those are the transactions. Now, we didn't see any group relationship there, meaning any transaction there was all uncontrolled or unrelated in nature. Now, in 2016 January, Spart Company Limited acquires all the shares of Holles SA, meaning any transaction that was going on between them, if it is still going on, then it becomes controlled in nature. However, the business arrangement between the two companies remained unchanged after the acquisition, meaning we can now identify the controlled transactions. Now, in the same month, Spart Company Limited incorporated a subsidiary, Smarten Shanghai in China. Now, note, once you have incorporated a subsidiary, you have direct participation in the control and the capital of the entity. So far as you have control, you have the ability to what? Govern the financial and operational policy decisions of the entity. So it becomes a controlled entity or a controlled associated enterprise. Now, Smarten Shanghai manufactures some of the smartphones while the rest of the phones continue to be manufactured by Spart Company. Smarten manufactures the phones using materials carefully selected by Spart Company Limited and according to the group specifications. The cost of manufacturing the phones in China are far cheaper than in Ghana. So the manufacturing of the phones and transferring them to the parent company is also a controlled transaction. The group makes a considerable gain by manufacturing in China. The phones manufactured by Spartan Shanghai are shipped to Spart Company Ghana for resale to customers in Ghana. So reselling to customers in Ghana, that will be uncontrolled. Okay, but the ones that are transferred between the two entities are controlled transactions, or Europe through Holles SA, that is controlled in Netherlands. Okay, so the question is to identify the controlled and uncontrolled transactions. And I know now you have understood the whole process. Okay, I know now you have understood the whole process. So you identify the controlled and uncontrolled transactions. So you see controlled transaction. It tells us that after the acquisition of Holles SA, the sale of finished goods by Spart Company Limited to Holles SA, the buyback by Spart Company of any unsold stock, and the manufacturing by Smarten Shanghai for the Spart Company Limited are all controlled transactions. Then the uncontrolled transactions include the sale of products to Holles SA before the acquisition, then the sale of finished products to other uncontrolled distributors, if there was any, and the sale of product by Spart Company Limited to Ghanaian customers. So that was it. And the purchase of any finished goods by Holles SA from independent suppliers, if there was any. Sales transactions between other suppliers and independent distributors. Manufacturing by Holles SA for independent customers, if there was any. And manufacturing by independent manufacturers for Spart Company Limited. Manufacturing by other manufacturers for comparable phone companies. Now, one thing you should also know is that so far as if you want to get more points, if I tell you that entity A sells to entity B, it means entity B buys from entity A. You can make it 2 points. That is how the exam is. So, for instance, you see it says sale of finished products from maybe Spart to Holles. The same way you can say purchases of finished products by Holles from Spart. That is why the points have become plenty. If you sell to me, it means I buy from you. Learn to make a point like that. It helps when you are dealing with questions.